Welcome back to the Broker Power Up podcast, the AIME podcast for strategies, stories, and insights to help you close more loans. I'm Tommy Golightly, joined by Jonathon Haddad.
Another day, another podcast, my friend. We're on fire.
Episode 12. We have a lot going on today. The Broker Buzz, where we dive into the top posts of the week from the Brokers Are Best Facebook group and discuss what's trending, what's working, and what you need to know. Then we're going to have the sales pitch, where John helps us become better salespeople. And then we're going to wrap things up with story time with John. I got a quick teaser right before we hit record, and I'm looking forward to this one. But first, now we start every podcast, a fortune cookie. What we got, John? What's our fortune?
All right, my friend. I like the noise, you know?
I know. I'm always so cautious of that around my microphone.
At first I thought about that when we started doing them, or when we first started, but then I was like going through, I go, sounds pretty good.
It does. It does.
It's not like I'm chewing.
No.
It's something good. Dude, I have terrible news.
Oh, no.
There's no fortune.
Oh, no. So what does that mean?
That means, you know what? I don't know. Does it mean something? Because I'm about to look it up. Uh-oh. I opened a fortune cookie. What does that mean if no fortune was inside? All right, here we go. I'm about to tell you what it means.
It means game over.
Opening a fortune cookie with no fortune inside is rare and kind of eerie. Common interpretations. You make your own destiny. The universe is quiet on purpose.
That sounds nice.
Start. No fortune equals clean slate. Sometimes no message means it's time to pause, reflect, or listen more deeply to your own intuition rather than external signs. A blank fortune can symbolize freedom and self-determination. Nothing is written because you're the one writing.
I like all of those.
So do I. I'm gonna leave Chat GPT on this one. And you know how usually you and I give our insights. Well, we're gonna accept those insights today because I've never had that happen to me before. Not that I've had thousands of fortune cookies, but I probably had at least my lifetime. I don't know, 50. I think it's probably a fair statement to make. But I like their interpretation. I think that's great. A blank fortune can symbolize freedom and self-determination. I've definitely been feeling very self-determined lately. I don't know about you.
Oh, yeah, and very in control. Very just...
I love that.
Fresh slate. A lot of new things are happening right now. A lot of changes. But like you said, it's your destiny to control.
So. I agree, man.
I like that a lot.
That was good.
I've also gotten fortune cookies where the fortune is on the outside, and I feel like that's just cheating because then you can pick it.
Yeah, and also like, I wonder what the packaging process is like. Now that I think through it in my head, I'm like, huh.
Sounds like a YouTube rabbit hole to go down later today.
That's a GPT rabbit hole, and then I might go visit a facility just to kind of what it looks like, but we'll leave it there.
Cool. Well, let's dive into the questions for the Broker Buzz this week, starting with our first question. I have a scenario where my client's family has outgrown their current FHA home and is looking to buy another FHA home and plan to rent out their current home. The departing property does have more than 25% equity. Can we use rental income on the departing residence as qualifying income?
Cool. Okay, so there's a lot to this guideline. There's caveats. There's a few things. So the first thing that the person that asked the question, the loan officer, is referring to, FHA has a guideline where basically, okay, if I'm living in a house and I want to depart and I want to buy another FHA home, so I'm going to have two FHA homes, then they're saying that, hey, I want to offset the rental income of my current property. I want to offset my payment with rental income of my current property. That's what they're asking for. FHA says, okay, well, in order to do this, there's a few things that we want to have happen. Number one, we need a 1007, which a 1007 is a document that tells you what the market rents are in the area. So, hey, based on this area, here's what rents could be. It's going to show you basically what the average is just to make sure you're not going to go crazy over or under. The other thing that FHA is going to require is a fully executed lease agreement. So they want it for 1 year. You cannot do month to month with FHA like you can in some other instances on different products. Has to be set for a year. The other piece of it is that the outside of being for a year, the consumer also needs to collect the first security deposit. Has to hit their bank account from the person that's going to be renting the property. And you have to show that to the client. Now, the reason they mentioned 25% equity is very specific reasoning behind it. FHA says that, okay, if Tommy has already been an investor and Tommy owns other rental properties, then we need the information I just said, and we're good to go. We'll allow Tommy to use the rental income to offset whatever the payment may or may not be in that situation on that home. Now, if Tommy has never rented before at any point in time, FHA is saying, well, this is a bit risky for us. So therefore, we want an appraisal done on the property, the one you're leaving. Doesn't have to be an FHA appraiser, by the way. It can be just any appraisal that does it. And then they, based on what you owe, they're saying that we want you to have 25% additional equity in the home. Okay, 25% additional equity in order for us to allow you to use this rental income if you've never been an investor before. All right. So to answer your question, there's a lot of components that go into it, such as, do they have rental history? And it'll be on their tax returns. It's called a Schedule E as in Edward. And you can see that they file taxes. You can see that they have rental properties. It breaks down all their properties. If that's the case, 25% is not a thing when you're exiting the property. So you have to ask the questions, and you got to know from the guideline perspective how it works. There's a whole nother thing for two FHA loans, like have to be 100 miles apart from each other. That's a whole nother bunch of caveats and rules that are associated with it. And it's one of the areas that is very important for us as loan officers to understand, and even real estate agents to understand. These guidelines, FHA loans, these are government-backed loans, okay? So it's black and white. And even though not every situation, especially in real estate, is not black and white, they don't care. It's just black and white. Here's what we're willing to do or we're willing not to do. And I was telling Tommy, especially government loans and even standard conventional loans right now, guidelines are changing like crazy. Even with this, I went online and I said, hey, let me just walk through the FHA guidelines and make sure that nothing has changed, because it's changed so many times. I've been doing this for 13 years. There's people doing this much longer than me and a lot less than me. But reading these guidelines are super important, because what happens is you go into a conversation with the client, and here's what happens, okay? Tommy, like mindset wise, this part drives me up the wall. Consumer comes in the door. They're talking to you. And let's just say they're also talking to you, Tommy, okay? So one talks to me, one talks to Tommy. The one that goes to Tommy, Tommy says, hey, listen, Tommy knows his guidelines. Tommy says, hey, okay, look, we can do this, but there's a few caveats that you and I have to walk through. So Tommy explains the caveat: the security deposit, 100 miles away, must have 25% equity, must do a 1007, must get a fully executed lease agreement for at least 1 year. So that's money the client has to spend, right? That is money. They have to do another appraisal. They have to do a 1007. They got to get a lease agreement, maybe get attorneys involved, whatever it is. They've never gone through that process. So Tommy's explaining all that. And then said client also calls me. And let's just say they call me and I say, yeah, that I could, dude, that's easy. Like, that's not that big of a deal. I don't want you to stress about it. We'll walk through it. Y'all, the client is, of course, going to want to work with who up front?
You.
Me.
It's easier. Right. Less friction.
And then what I've seen is this goes into process, and it's an absolute dumpster fire. Clients are losing their minds. Agents are losing their minds. We get posts in the Brokers Are Best Facebook group about, I can't believe this. And it's all because we didn't want to manage expectations. We wanted the quick dollar. We wanted the quick excitement, and we'll resell the client later. Read the guidelines, go through them. Great question. I love that you asked, because it is intricate. There is a lot that goes into it. So I love that you went through it and asked that question. But I want y'all to make sure you're reading these guidelines. FHA, it's all online, really easy to find. Control F, wherever it is on your computer, and you can start typing and searching away. So great question, but a lot that goes into it.
Yeah, absolutely. I'm no guideline expert, but hearing the 100 miles away part, that's the first time I've ever heard anything like that. So,
When there's ways, you can't be within a certain amount of feet of a gas station on FHA loans. You can't if you have well water or septic, you have to get all the mapping of like the septics and everything, and they have to be certain amount of feet away from the house, certain amount of feet away from a well if you have it. If you have shared water with somebody for FHA loans, you have to know about all of that. Like that's the stuff that kills deals. And then what happens is because not everybody knows it, and then a broker's trying to put a loan in, we will on occasions get a bad reputation. Oh, well, the mortgage broker didn't know and it has nothing to do with that. It's just the fact that there is a lot, and we just need to spend a little bit more time digging through those guidelines. So I never say like, yeah, we're good. And again, how do you find out about being within, I think it's like 100 feet of a gas station? Well, you end up writing a loan that's 100 feet and you never forget. That's me. The big thing is I just never forget. Is that something that I would have looked up prior to it happening? One out of thousands of loans I've done, literally one time. No, probably not. But again, this is stuff you have to learn and be prepared for and know how to have that conversation.
Absolutely. Well, number 2, can HELOC funds be used as a gift from a parent for an FHA loan?
Any funds that are secured funds can be used as long as you can prove that it's tied to whoever's giving you the gift. So secured is tied to something. Secured, my house is a secured asset, right? That means, God forbid, if something happens, someone's getting collateral, right? So an investor's getting collateral, it is secured. Therefore, when it comes to a gift, if it is coming from a home equity, because what they're talking about, Tommy, is this. Somebody can't take a loan out, give to you as a gift, and then if I look and I see the money, because I need the person that's giving you the money, I need to see their account statement just so I can see, okay, do they have the funds? If I look in there and I see that the funds look like they got transferred from a secured or from a loan, I have to ask about that loan. And if it's a loan that's unsecured, you can default. You can just stop paying and there's nothing they can do, right? So it is important that you ask that question. Hey, is it going to be secured to a home? Jonathon, aren't all home equity lines of credit secure? The answer is they should be, but not everybody's actually getting a home equity line of credit. Sometimes they might be saying that it's the case, but they'll go into their credit union or whatever, and they just give them a line of credit. Very different than a home equity line of credit. So if it's secured to collateral, yes, you can use as a gift.
Got it. Cool. Well, number 3 this week, how do you build referral relationships outside your local market?
This one is so I do a lot of this personally. And I have so many thoughts on this, and I want to make sure I pinpoint it to 2 or 3 areas. All right. Number 1, the first thing that you need to understand about this, whenever I go into newer markets, I'm always like, it's going to sound crazy, but I am legitimately stalking agents in a light where it's like, hey, are they an up and comer? Like, are they posting online? Are they excited? What's going on in the area? I usually won't start by going after somebody that's doing tremendous amount of volume, right? 50 million, 100 million. They have somebody in their state, and it's going to be tough to break through that, especially if you're not in their state. So I always look for up and comers, and I'll try and call like 10 of them is what I used to do, especially ones that are heavy on social media. And those are the ones that I start to build a relationship first with, because I know nobody's calling them. No one's really talking to them. And then when I call, it's not for a cup of coffee. When I call, my conversation's different. And again, everybody's going to have a different thought because it just depends on where you're at in your career. But for me, the conversation is, Tommy reaching out. Hey, I just want you to know, I know it's going to be probably a pretty awkward call for you if I'm going to be very just blunt and transparent. But I work with a tremendous amount of agents here in Michigan. And it looks like you are really doing great work out in Nevada. I've actually been reaching out to a few agents that are up and coming, and you happen to be one of them. I'm just curious, not to take us off the scale here, not to take us off the track, but what made you jump into this field? And I start with so much curiosity. Yeah. Now, Tommy, how many, if you don't mind me asking, have your phone been blowing up with lenders just yet? Or am I one of the first?
It's been blowing up. It's been blowing up like crazy.
Receptive. The newer agents are so much more receptive. Now, again, you're not going to know if something's going to come from it. The reality with agents is just like loan officers. Okay. You call 100 agents. It's not like all 100 agents are going to be doing business. That's just it is what it is. That's okay. That's okay. The difference is you figuring out where to pour your energy into. But the only way to do that is to have conversations. And then from there, once I have a warm intro of sorts at all, the next thing that I do, it's social media nonstop, right? Like you're going to see me, you're going to see that I mentor, you're going to see that I do business plans, you're going to see the agents I work with. Then all my conversations on social media and online are legit business planning, taking accountability. And that's my social media now, as y'all know, you can look at it. And now those new agents are like, wait, that's I'm attracted to that. That seems pretty cool. He seems pretty good. Wow, he seems like he works with some pretty high level agents. Maybe something's there. And so that's worked really well for me. And then from there, I can talk about all the things I've built and done and gone through and how to maintain. But it's starting there first. The other route that works really well, I shared it this morning on the Mortgage Morning Call. What I did early on, because I started doing, I got into the broker space during COVID. We couldn't do meetings in person. So I put together this Did You Know email, and I would craft these emails. And what I would do actually, Tommy, I could probably share my screen on this one. I have these saved.
Awesome.
Yeah. So you can see, I would send this every week. I'd call agents, and what I do is, hey, my name's Jonathon Haddad. I've been doing this for quite some time. The market is super volatile right now. All I'm doing, I'm asking for email addresses, keeping you up to date whenever things change, especially with what's going on right now and products leaving left and right, and nobody knowing if we're going to be able to close or get all this stuff done. So what's a good email address for you? They'd give me their email address just like that, and then I started sending these out every single week like clockwork. And I just had a bunch of fun. So here's an example. This one's from Monday, July 13th, 2020, 8:25 a.m. How fun was June? Almost halfway through July. Does anyone else keep forgetting what day it is? The list continues to grow with incredible realtors and other mortgage brokers. 2 fun facts for you today. Lenders are at capacity. What does that mean? Jumbos are back. What does that mean? This is what I did every week like clockwork. And this list just kept growing and growing and growing. So that's another area that a lot of people can start. And then people started replying, and that was another big win for us. So a lot of stuff you can do here, a lot of it.
Awesome. Yeah, I like the little tidbits of like, here's what's happening, here's why it matters. Here's what's happening, here's why it matters.
100%.
I feel like a lot of people nowadays will read the headlines, but not dig into why it matters. A nice digested, breaking down version of that, like you had there in just a brief paragraph explaining it, is huge.
And then once they reply, like what happens is people would just reply. And then that's how I started getting business. Hey, I might have one for you to look at. Hey, can you take a second look at this? Hey, can you tell me if you can do it? Was insane. It was insane. I was doing loans. If you look during COVID, I was doing loans in so many states. I mean, it was crazy because of just the little stuff like this. And then, I mean, thank God, 16 weeks of doing it, I exploded and legit just couldn't do it anymore. I was at that place. So there's a lot you can do there, y'all. Don't think you cannot do anything.
Absolutely. Well, if you want your question answered on the Broker Power Up podcast, become an AIME member, join the Brokers Are Best Facebook group, and post it there. And you may have a chance of having it read here on the podcast. So scan the QR code in this next ad, become an AIME member if you aren't already. And if you are an AIME member, check out all the new crazy benefits that have been coming to as part of your membership. So on the other end, we'll see you for some sales pitch training.
Are you a wholesale mortgage professional? Well, then the very first thing you need is a community to help you and your business grow. With AIME membership, your community is right here. Joining our community means never navigating the market alone or operating without a safety net ever again. We are 16,000 members strong of united wholesale professionals. From rookies to top-ranking originators, all dedicated to supporting each other's success so we can grow together. Beyond entry to the best community in the mortgage industry, AIME membership gives you the resources, tools, guidance, discounts, services, and support that help you and your wholesale business grow, thrive, and most importantly, close more loans. AIME membership connects you with leading wholesale lenders and vendors, offering you exclusive access, services, and discounts that save you more money while helping you make more money. Never get stuck on a loan again with our lender escalation program. Grow your network and skills with the wholesale industry's best conferences and networking events. Get the strategies and skills of top originators and industry innovators with AIME's cutting-edge wholesale mortgage education, resources, and content. AIME offers all of this and more, starting at a low price of $19.99 a month. You heard it here first, couple cups of Starbucks coffee. For you to learn more and get started, all you have to do is visit aimegroup.com, AIME group.com/membership. Your community is waiting.
All right, and we're back.
So, little sales tip today, courtesy of Tommy, gave an awesome idea, and I want to walk you through the science behind what I'm going to say. Everybody, right? I think one of the big things, and by the way, I ask the question too to people all the time, and I think people are curious, but what's hard in our space is we are so type A in the real estate, mortgage, just commission sales. Most people are in that type A. And so when you're in that type A situation, what happens is when someone asks you a question like that, you're not even thinking. Like, you don't know the process. It's like you just do it and you've learned how to do it and you don't think about it anymore. So I've been in that situation so many times, and I've worked hard over the last probably 3.5, almost 4 years at this point, being able to articulate myself in a way that is giving people systems and process and easy to follow steps. So here are mine. I have some science that's backed with it that I wanted to share with all of you. So when it comes to prioritizing anything in life, there is an entire method behind it. So decision theory, time sensitive revenue, like optimization, and then cognitive load management. So it breaks into 3 parts when it comes to business. I'm just speaking business for a second. And then if you add your personal life, the time sensitive revenue optimization is literally time sensitive you time, right? It's like pouring back into you, making sure you're good, your personal life. That's the whole idea. So prioritizing loans, prioritizing your day is really simple. First thing you need to do, everything you have, you need to know the stage of all those loans. Some of you might be saying, well, John, like that's easy. Well, it's really not, because I have, and I do this too. So when I'm talking to you, like I'm breaking some of these habits, I'm breaking a lot of them, to be upfront with you. But when I go through a lot of my LO's pipelines and I say, okay, and I jump into their system, with whether it's Arrive, I log in and I take notes and I look at the notes. No notes are updated. Arrive isn't updated properly. They don't have all the proper fees in, right? They don't know where the loan actually is. They don't know the last time they talked to the client. So you can't really identify the stage of that specific client. You can't. You have nothing in the system. So you have to break those habits and update everything properly. So I'd start there. How well do you know your clients that you currently have? How great are the notes? Or are you just leaving notes on the files you write and put in process? That's where a lot of people screw up. So number 1, identify the stage. Number 2, you have to determine time sensitivity. I'm really big into, so on like purchases, contract date, obviously, is what I go off of. Lock date, that's important too. But purchases, it's like what's coming up next week. Let's make sure the lock date's dialed in. Let's make sure I don't have to extend anything. When must this loan close? Number 3, like evaluate revenue. Where am I at on average? Where's my margin sitting on average? What does it look like? Where am I losing money? Where am I gaining money on some of these loans on my business? Where am I spending too much on my business? Then you start really understanding and addressing the revenue, right? Trying to figure it out. Like, what average loan size does the company need to use or I need to have? What's my average margin across the board? And then is there any little tidbits, pieces? People think like 10 basis points, y'all, adds up. It adds up. For every $100,000, that's $100. For every million, it's 1,000. It's 1,000 real dollars just by 10 basis points of you figuring out where you can make adjustments, where you can cut some cost. So that's number 3 from a prioritization standpoint. And then number 4, client referral partner influence. So any loan that could jeopardize your relationship with a partner, somebody that you've built a strong bond with, where you need the stuff done, those are like the first things I escalate. as I go through my day. I got to get those in front of the right people to make sure nothing is missed. I got to make those phone calls. I got to prioritize. I got to make sure my referral partners that send me a bunch of business that help put food on my table for my family and I are absolutely taken care of. That's how I work from it. There's a bunch more, right? Like assessing risk, having like a tier system. I use a whiteboard and I have like 4 quadrants on, pre-approvals, locks coming up, things of that nature. And then I go through that every single day. So really simple. There's a lot of science behind it. Look up decision theory. Really, really cool, really fascinating. But this is how I spend my time prioritizing, and it has helped me tremendously.
Yeah, I think that's really important. And just spending a couple extra minutes not doing anything except reviewing it, just looking at it. And sometimes you will see things like what your to-do list for the day, right? And sometimes you'll see things like, oh, that is that needs to be done first, or this can wait. Like just evaluating when certain things are deliverables are needed and when certain uh, priorities are stepping in, and then always leaving yourself a little bit of extra time for the unknown that inevitably just falls on your desk.
And you're so spot on, Tommy. And the other piece of it too, man, is you have to also learn to make it a habit. And even if like, okay, you don't like my routine, no, who cares? Have one at least, right? Like have a process. Doesn't need to be mine, but it needs to be yours, and you have to do it every single day.
Put it in your calendar.
Can't do it for a month. It's every day. So figure out your process, figure out your systems.
That's what I do. I put it in my calendar, and I have a 10-minute chunk that I'm reminded to go and just look at everything and prioritize everything for the day. And everyone has the habit of picking up their phone and looking at social media, and I bet you do that more than 10 minutes a day. So where's the value that you got from that 10 minutes compared to just the 10 minutes you spent looking at your actual priorities of the day?
Dude, that's a whole nother topic, right?
Yep. Maybe next week.
Minutes add up. That's my friend.
Absolutely. Cool. Well, I'm going to roll an ad so that you can learn more about what's going on at Fuse this year. And then on the other end, we'll have story time with John.
Thank you. Fuse is just around the corner, believe it or not, another year down. And we are excited for the largest event of the entire wholesale mortgage industry. Fuse National Conference 2025 is taking its show on the road. Now emanating from Nashville, Tennessee, from October 23rd through the 25th. This event is all about sales, sales, sales. Don't miss the chance to join us in Music City for 3 days full of the most cutting-edge content we've ever produced, featuring the industry's top minds, leaders, and innovators. Access the newest tools and resources from wholesale leading lenders and vendors. Take part in our acclaimed workshop summits for free. Catch wholesale's rising stars in their very own breakout sessions. And of course, take part in the best and, quite frankly, the most fun networking opportunities you'll find in the wholesale channel. Join us to grow your network, your skill set, and your business at what will no doubt be the greatest Fuse conference yet. Go to fuse.aimgroup.com to sign up and receive updates when tickets go on sale. Secure your hotel room and get your Fuse tickets for free. That's a $600 value for the prices as low as $199 when you sign up for an AIME annual membership. Don't miss your chance to be there when wholesale history is made at Fuse 2025. I can't wait to see you there.
All right, and we're back. Ready for story time with John?
I am
I'm
ready.
going to hand it off to you, and I'll see you on the other end.
So today's story is about showing up. And it doesn't matter whether you are an account executive, doesn't matter if you're a loan officer, real estate agent, processor, insurance agent, doesn't matter. So on Wednesdays, we do our 6 a.m. call. And, on many occasions, special guests will just pop up out of nowhere, unintended, no idea what's going on. And on Wednesday, we had Rob Piccolo come in from AFR, who has really been the person just changing AFR, the rebrand, what they're doing, and it's been great. I mean, the community's absolutely loved what they've done and all the changes they've made. But I was on the call today, and I started talking a lot about agents, and I started talking a lot about not being afraid to have conversations. And we got a lot into just showing up and being willing to be the expert and becoming the absolute master of your craft and learning guidelines and learning how to talk and learning how to control your energy and your presence and make people, understand who you are through your intelligence and ability to speak about something. Well, there's a fine line between somebody acting smart, right? And I'll show you, I know more than you. That really throws people off. But the other side of it is somebody that knows so much that they can explain it to anybody, whether it's you, whether it's a 5-year-old, it doesn't matter, because experts are able to articulate themselves in that kind of manner. And you see other people start grasping it and they become attracted to it. And I was talking about that, like when I call agents, there's just certain things that we have conversations about where in the back of their head, they're like, okay, this person definitely knows something and they're not trying to throw it in my face. It's a way where you ask questions and the person's interested and intrigued with you. And you see, so I'm talking about all this and I'm really diving deep into it when I make the call to the agent, how I become a business partner to the agent, how I help them grow. And I'm giving all these tips back and forth. And then I see Rob on there and I start asking Rob, I go, Rob, I know it's 6 a.m. Any chance you can give insights for us today? So Rob jumps on. He's like, yeah, man, what are you curious about? So I start asking him questions about our market, about the volatility in the market. And I start talking to him about things that are could be very confusing. In the mortgage space, for those out there, when a loan gets locked in, then there's an ability to hedge that lock. So these lenders will hedge the locks. And in that situation, there's a little bit of money that can be earned. There's also a lot of money that can be lost. That's a risk on the lender that they take, not the mortgage broker. It's on the lender. So Rob's explaining how this works and how it operates and why there's certain areas where there's justification to it. And then as he's talking, I'm looking at the comment section. Now, keep in mind, this is 6 a.m. For some people, it's 5 a.m. on this call. It's 6 East Coast time, right? Or 6 o'clock East Coast time. The questions start pouring in. Boom, one question. Sparks the next question. Sparks the third question. Sparks the fourth question. Somebody that's never been on the call before. Somebody that the community, they don't do a lot of interaction with him at that level. But yet, he spoke in such a way that was easy to understand that the questions started pouring in. And sure enough, inside of some of those questions, people said, hey, I'm not signed up with AFR. Can we have a conversation? And then Rob sent me a message after. He goes, hey, man, I got 2 more messages from that conversation today. And he doesn't know if something's going to come from it. He didn't even care if something's going to come from it. He wasn't doing it for that. He literally said, I've heard about these calls. I just wanted to get on one. That was it. Just wanted to jump on one. I see him every week. Thought I'd jump on. And so because he showed up at 6 a.m. and happens to be really good at his craft and happens to understand his craft so well, he was able to articulate himself in a way that attracted people towards him and his company. And not everything he said was going to make you jump for joy, right? Hey, yeah, we are dealing with a couple of these things. Yeah, for sure. Turn times. Yeah, definitely. That's going to get better. Here's our justification. Here's why we think this is the best route. People are nodding their heads. People are posting like, hey, I'd love to talk and sign up even after he says all of that. Why? All because of the way he managed expectations and articulated himself. So, what is my challenge to all of you? My challenge is really, really simple. 1, show up. 2, teach. Learn to teach. There's no better way to learn than to teach something. But in order to teach, you got to practice. What are you doing to practice? How well do you know your space? Some of you might be saying, well, John, what should I focus on? Well, if I'm a loan officer, I'm going to practice objections. I'm going to practice getting shopped. I'm going to practice those phone calls. If I'm a real estate agent, Right now, you know how many agents I've asked right now? Hey, how much role play do you do when it comes to the NAR settlement and commissions? Not much, not a lot. How could you not? Yeah, like no one can look me in the eye and tell me that the landscape hasn't changed for real estate agents. You have to get an agreement signed. It's awkward. So what are you doing to get yourself ahead? The first thing you got to do is just show up. The second thing you got to do is learn to teach and practice your craft, because people will be attracted and gravitated towards you simply because of that. So, Rob, thank you for Wednesday. Thank you for the morning call. Thank you for showing up. Thank you for educating our people. We can completely see why AFR has rebranded and is moving in the direction it is today. Appreciate y'all, my friends. That is all.
Awesome. Yeah. I mean, I couldn't agree more. Showing up and being in the room is huge, especially on those 6 a.m. calls, because that's the only way you see it. You got to be in the room, right? You got to show up. And I love that. And it's the other thing you said about um, not everything he said was great, but he gained a lot of, not that it wasn't great, but it wasn't good news. Um, but a lot of people wanted to follow up that conversation. He presented himself as the expert, and people are attracted to experts because they will want to rely on them as a resource. But that conversation can go both ways. And
It,
I think that's really an awesome outcome from that call.
it was, man. And like even managing, what you're talking about is managing expectations, right? That is such a, we talked about that on the call. Managing expectations is so deep where I was saying on the call this morning, it's like, you know, if you're a loan officer and you have a deal and you know that it's going to be tough to close and you have a week to close the loan, so many loan officers will wait till the last day to call the agent. Like try I've been there. Like let me not pretend that I haven't been there before. But you learn that that's just not going to work. It's better to give yourself a week, let somebody calm down. Like asking someone to calm down a day before yes, the client's closing, but let's just be serious too. The agent's getting paid that day as well. Most of these agents with the companies they're at are paying them same day, if not the next day. So they're also anticipating that pay. Like, like y'all, you have to think about that. Okay. That pay could be their planned trip vacation. That pay could be how they pay their bills. I'm being real. Agents, not a lot right now. It's just like LOs, 80-20. A lot of agents aren't doing multiple transactions a month. Maybe one every other month. So think about that for a second. So the managing expectations piece, like even if they're upset, they're going to calm down a lot better giving them a week than you telling them I need a day. Now I say, look, I need an additional 4 days. I can get it done, but I'm letting you know a week in advance. You're going to be pissed. Fine. But it's better than you being pissed the day before you thought you were going to get paid.
Yeah, absolutely. Absolutely. Cool. Well, thank you for tuning in to this episode of the Broker Power Up podcast. If you found today's tips helpful, do us a favor. Hit the like button to let us know you enjoyed it, which helps even more people see this content. Subscribe to the YouTube channel, ring the bell to get notified every time we drop new content. Share this video with a fellow broker who could use a power up. And remember to lead by example, to lift each other up, to grow together, and most importantly, close more loans. Until next time, keep powering up.
Take care.